So a little over 4 years ago, I started Lyn Alden Investment Strategy. And prior to that, I actually worked as an engineer. During my course of engineering, I was always interested in finance. But my primary focus was engineering management. As time went on, I got more and more interested in the financial side of things. And I started to notice that there's a vacuum for independent research that is still kind of aimed at investors that might come from an institutional background or that want somewhat more sophisticated analysis. My first passion probably was investing in finance before I went into engineering. When I was a kid, I was investing. Started with precious metal coins, and then it turned into equities. But when I went into university, just for economic reasons and because my other interest was technology, I went into engineering instead. But I guess the way I would describe it is there's that constant draw that I had back towards finance in a way. And so even though I worked as an engineer, I very much enjoyed it. I always found myself, generally thinking in terms of the accounting side of it, or in terms of the business strategy side of it, or in terms of, kind of wanting to think of things on a bigger scale. Basically, I just saw that opportunity to, kind of polish up my writing and kind of bring some of the quantitative background that I had in engineering to finance, especially because I started to see that, the world was becoming more macro in a sense. They were basically clearly in a large turning point for how a lot of our systems work, a lot of our assumptions. And so I wanted to kind of capture that moment and make sure that my voice is out there and make sure that, basically there's so much exciting things going on. And it was hard to kind of just focus on engineering work when there's this whole world of things to analyze. We kind of had this long, siloed setup where there's institutional grade research that's part of major investment banks. And then if you go to the quote unquote newsletter business, it was very retail oriented, often sensationalist. And there's clearly a vacuum there to, use the independent nature of how things are decentralizing, while still trying to have a somewhat of a more polished or a more rigorous approach, more quantitative approach to how I go about things. And so that was what I try to do, is essentially take institutional level research, but then democratize it at a price point that is pretty accessible. So I divide my research into two main types. There's some that are more tactical in terms of trying to analyze markets over the next 6 months, 12 months, focusing on current events, interpreting current events to see how that can impact investments that I focus on and that my clients are interested in. And so the second type is the longer ranging thought pieces, where I kind of look out 5 years, 10 years, or I try to explain something that's currently happening from a very high level view, and that piece can be read a year or two later and it's still almost as relevant. So those are the two types of content that I put out. And generally my approach is that I'm always writing multiple pieces at the same time, and that I shift my focus on whichever one is calling me in that moment. So that's kind of my way to avoid writer's block, in the sense that if I'm stuck on one area, I just pivot to what I'm clearly more feeling at the moment, and then come back to a more challenging thing in another time. Another part of my business is reaching out to either subject matter experts, and especially as I've incorporated Bitcoin and digital assets into my research process, kind of reaching out to executives in the industry and understanding how things work, trying to get down into the weeds, because that's, I think, one of the biggest areas that so many of these traditional research firms or investment banks, they often are just not tied in enough to the technical details. And so I try to keep myself really kind of grounded in some of the more technical details of what's happening. For Bitcoin, it's one of those things I had to be introduced to it multiple times in order to fully get it. And so, the first time I encountered it was actually back in, it must have been 2010 or so. I had a friend that was still mining it on her computer back at the time with a graphics card. And I always thought it was neat. I never had that knee-jerk reaction of like, oh, it's worthless. I always thought it was neat. And each time I would kind of encounter it, I would research it a little bit. Back then, there obviously was not a lot of information on it. But then I would forget about it. I would basically say, I don't know how to price that. I don't know what to do with that. It's neat. And I would just kind of leave it aside. I had a very busy life, and so I'd go back to other areas. But inevitably, Bitcoin would eventually keep appreciating in value, capture more media attention, and occasionally I would be drawn back to it and say, what is happening here? Now there's other assets in the space. And so I wrote my first article on it back in 2017 during that big bull run, because I had a lot of client interest and reader interest in my thoughts on that ecosystem. And I had like 3 or 4 different valuation models in that piece. And so depending on what your assumptions were, you could kind of come to your own, kind of pick your own adventure for what you think this asset's going to be worth. And so I ultimately passed on it, which for several years was a good decision because it had that blow off top, then it collapsed, and it had this multi-year sideways consolidation. It underperformed many of the other things I was focusing on. But I kept studying the space overall. And I think the key thing is to be open-minded in the space. So a lot of people, they analyze it once, they lock in an opinion, and then even as things change or even as new information becomes more widely disseminated, they don't necessarily update that decision that they made all those years ago. But I kept monitoring the space, and some of my concerns that I had were mostly addressed. And so as we got into late 2019 and early 2020, I was more on board with it. And of course, when we saw the March 2020 crash across asset types across the board, I saw that Bitcoin behaved a lot like the precious metals did. And so I understood a liquidity shock when I saw one. And so I used that opportunity to get on board. And so in April 2020, I finally invested and began recommending Bitcoin as an asset. And then I kept researching it from there, and my conviction on the asset kept growing over time. The overarching theme for this series is essentially to explore what is money, because how we think of money changes over time, both in terms of how our formal monetary systems are structured and also the cultural aspects of money, or how people, kind of interpret what money is and what money means to them. And so we start out looking at some of the past aspects of money. Then we explore some of the psychological aspects of money. And then lastly, we get into some of the technological changes that are happening to money, as well as some of the cultural shifts around money and identity. So I'm going to talk to analyst Luke Gromen, who specializes in understanding some of the details and the shortcomings of the way that the current monetary system is structured. So we're going to explore in detail the petrodollar system that's been in place since the 1970s and that is still in place to this day to varying degrees. And we're going to explore some of the how that system was constructed, what are some of the costs for maintaining that system, and why is that system maybe no longer serving the interest that it was originally designed to serve.
In the mid-'70s, the United States and the Saudi government came to an agreement, which came to be known as the petrodollar system, where effectively Saudi agreed to only price oil in dollars. When you combine Saudi oil production with United States oil production, which up until just a few years prior the U.S. had been the world's biggest oil producer in the world. But the gist of it was a quorum of the world's oil was being priced only in dollars. And so you came to this system where oil was effectively backing the dollar to replace gold at a fixed rate, which had been backing the dollar.
Basically, there's a lot of implications when you have a global monetary system change over time. And so when we go back in history, for example, this system's been in place for, 45, 50 years, depending on exactly where you want to start the clock. The system prior to that was the Bretton Woods system, which was only in place for 25 or 30 years. And then the system in place before that was, for a number of decades. These big moments in time tend to shift pretty dramatically. And so we explored it. We're going to explore in depth the upcoming kind of transition that we seem to be going through. With Jared Dillian, we focused on the psychology of money and specifically for inflation, because a lot of my focus is on the quantitative analysis of things. What is money supply doing? What is happening with the commodity capex cycle? What is happening with supply chains? And so I look at things from kind of a numbers perspective, whereas Jared focuses heavily on the psychological element. And how we can do all we want with the numbers, but at the end of the day, human decisions drive our economies, and so understanding these big shifts in perception play a very large role. And so we're going to explore with Jared some of the psychological aspects of a deflationary environment or a disinflationary environment compared to an inflationary environment, and why some of these shifts might or may not be long term rather than just transient.
If you want to talk about the stickiness in the long term, what we're talking about is like very long waves in terms of psychology. And we are just a year into this. And, when you're talking about policymakers, if the Fed, first of all, I don't think the Fed really has an idea of what it takes to stop inflation. I mean, everybody knows academically you have to raise rates, but they're not really going to do that until inflation becomes a big political concern, until it affects people's ability to become reelected. So there's not really a willingness at the Fed to really do what it takes to fight this inflation.
And with Meltem Demirors, we're going to focus on the really big picture concepts, the really long-term changes that can happen, especially that can happen very quickly in some cases, and these stepwise changes, these exponential changes that can happen with new technology. And so we're going to focus on, the changing role of institutions in our past, as well as how those institutions can morph going forward into a more digital age.
Institutions don't look the same as they did in our old world, in the meat space world, because all of a sudden we no longer require physical proximity to enable social coordination. And I think fundamentally, what's happened here that I think very few nation states have grasped is this long-held tension between voice or exit, right? Historically, our ability to exit has been limited because the money has always been the limiting factor. There's no way for me, if I'm dissatisfied with what's happening in this country, to exit the US dollar. There wasn't until 2010.
We're going to talk about Bitcoin in particular, but also the broader kind of cultural understanding of what money is and what identity is as we go through these technological shifts. I'm really excited to get her thoughts on that. A big theme that I've been emphasizing is that when there's problems with the money system, it transfers to everything else. When we're in an environment where your savings account and your checking account are yielding below the inflation rate and where they fail to preserve your purchasing power over time, we historically started to see speculative behavior. So this is something that, developed markets in many ways are encountering for the first time for a couple of generations. But when we go back in history, this is a really challenging environment for people to navigate because the unit of account, the money that they use itself becomes questionable. And so they start, monetizing other assets. And so especially in this online culture, it becomes rather funny, but it ultimately is a very serious topic. And so when I'm asked about 2022, I often think that, whether or not that year turns out a certain direction, I think the bigger question is what's going to happen to the 2020s decade, because any one year might be an anomaly, especially when you have these big changes. It's never linear. It's never with low volatility. And so one year could be all the trades that worked the prior year stop working, only to start working again the next year. And so at least, there's all sorts of risk management approaches for how people navigate those environments. But my main focus is on the big picture. So I think 2022, we'll see a cooling off of some of the things you've seen in 2021. Most likely, it depends on all sorts of policies that are maybe outside of our control or forecast at this moment. But I think the bigger theme long term, as we look, towards the end of this decade and during that process towards it, is that we're clearly having a transformation in what money is and how we interact with money and what assets that we monetize as we kind of preserve value from one system to another.